Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, before we start, here's a quick look at the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a quick look at the economic calendar and see what's coming up this week. Right, as usual, there's quite a few things going on. I just want to bring your attention towards US inflation data and retail sales that is out on Wednesday, 13th of November, and Friday, 15th of November, respectively. And also, we've got macroeconomic data out of China as well, falling on Friday, 15th of November. Right. This is the calendar for this week. So, in addition to all those that I mentioned, we've also got Chairman Jerome Powell speaking on Thursday, 14th of November, along with ECB President Christine Lagarde, as well as Bank of England Governor Andrew Bailey. All three of them will be speaking at their own respective events, right? And we've also got UK labour market data out on Tuesday, 12th of November. CPI, as I mentioned, US CPI is out on Wednesday, 13 November, 1:30 p.m. GMT. Tomorrow as well, we've got several FOMC members speaking as well. We have Governor Waller and Philadelphia President Harker speaking as well. And then we have PPI data, US PPI data, and Australian employment data out on Thursday, 14th of November. And finally, Friday, we have US retail sales, GDP data out of the UK, as well as industrial production figures and retail sales from China. All right, hi Bob, great to see you. All right, welcome back. Great to see you again. All right, so taking a slightly closer look at US inflation, right? Here are the charts for annualized inflation, right? We have headline CPI on the left and core CPI on the right. Right, headline CPI has moderated significantly lower since March, hitting a high of 3.5% year over year, dropping down to 2.4% in September. Right, hi Ajay, good to see you as well. While headline CPI has continued to moderate lower, we have seen a slight acceleration in the core reading, right? The core reading accelerated from 3.2% in August up to 3.3% in September, right? Mainly due to higher prices for services, less energy services. And this category is widely closely monitored by the Fed as well, right? So should we see this category continue to remain or continue to see prices for this category increasing higher, right? It may place some doubts within the Fed officials, amongst Fed officials, about moving ahead with another rate cut at the December FOMC meeting. Right now, looking at the forecast for October, right, we are expecting to see the core CPI rise 0.3% month over month, while headline CPI is expected to rise 0.2%. And on an annualized basis, we're expected to see headline CPI remain unchanged at 2.4%. Right, so if you see once again inflation, if you see October's results coming in line with the respective estimates, we can probably expect to see the dollar come under a little bit of pressure, right? Demand for the dollar has surged since last week, right, following the outcome of the US presidential elections. And should we see inflation data match their respective forecast, it could cause the dollar to lose some steam. Now, looking ahead at retail sales, that's out on Friday, 1:30 p.m. GMT time. Right, retail sales have been chugging along pretty well over the last 3 months. On a monthly basis, we can see it rose very strongly in July, falling quite sharply in August, only registering a small gain, minor gain. However, we saw of 0.1%, but we saw September rebound quite nicely as well. Right, on an annualized basis, US retail sales has been increasing relatively stable, right? It's not really accelerating or decelerating, but it's been relatively stable. And we can see that for October, we're expecting a monthly gain of 0.3%, right? So another month of steady gains. And as we approach Black Friday sales, and also the upcoming Christmas shopping season, right, we can expect retail sales to remain steady, right? So if we do see stronger sales figures being reported for the month of October, right, that's quite likely going to create some tailwinds for the US dollar. Right, now taking a look at industrial production figures out of China, that we're expected to see industrial production increase further, rising up to 5.5% year over year in October, right? So September saw a nice rebound or nice acceleration, right? This was the fastest expansion in industrial output since May, right? With sectors such as manufacturing and electricity, heat, gas, and water uh, being the primary drivers, right? So this was the fastest expansion since May, accelerating strongly to 5.4% in September, and this acceleration looks to continue in October with a reading of 5.5%, right? So if we do see industrial production figures exceed the forecast, right, it signals higher uh, manufacturing activity in China, which is quite likely going to function as a nice tailwind for crude oil prices. So take note, stronger production figures are likely to boost crude prices on Friday. And we also have retail sales that are released at the same time. That's at 2 a.m. GMT. And we are also expected to see retail sales increase quite sharply on an annualized basis. We can see in September, retail sales rose 3.2% year over year, rising from 2.1% in August. And for the month of October, we're expected to see retail sales increase even further, rising 3.8% year over year. So should we see a combination of strong retail sales and higher industrial production output, right, we could see a nice tailwind for crude oil prices on Friday. Now, let's dive into the charts and trading view and begin the analysis on the dollar index, right? We'll start on the dollar index, look at a couple of the other major currency pairs, touch on the commodities, the indices, and we'll wrap up with crypto as well. And of course, should you have any other requests for any other instruments, please do drop them in the chat box early so we have time to go through the analysis together, right? Right, so looking at the dollar index, right, if we look on this date here, this candle here on Wednesday, 6th of November, that's when we had the US elections come to conclusion, right? We saw strong demand for the US dollar pick up on that day, right, with the dollar index rising as high as 105.44, right? Then after a sharp pullback on Thursday, 7th of November, dropping down to about 104.40, we've seen a nice rebound since last Friday, right? So the dollar index has rebounded strongly from 104.40 from last Friday, and coming now very close, rising up towards 105.50. So very strong rebound since last Friday, and I think this dollar index is expected to continue to rise higher, right? And where the next resistance comes in is at this swing high resistance that has taken place here on 28th of June. There's a nice swing high resistance taking place here at the end of June, and it's also accompanied by a Fibonacci projection at 61.8%. Right, to find this projection level, we started from here, this low on 27th of September, going up to 0.2, 29th of October, and ending at 0.3, which is on the 5th of November. We can see the 61.8% projection level aligning very well with the swing high resistance that has taken place at the end of June. So this is where the pivot has been identified. This is probably where we can expect the dollar index to run into a little bit of resistance here, right? We can probably expect it to stall around here. And also, if you've been long on the dollar index since last Friday or perhaps from this morning, right, identifying your take profit target close to the swing high resistance here at 106.04 would be a suitable area to do so. So take note, the pivot is a swing high resistance that's accompanied by a Fibonacci projection at 61.8%. And of course, should you be long the dollar index as of last Friday or perhaps even from this morning or as markets reopen today, right, identifying your take profit target at around 106 is a suitable area to do so. Beyond the pivot, the first resistance sits at 106.51. This is like a multi-swing high resistance here, like we see a nice double top taking place in firstly in mid-April and then at the beginning of May, right? A nice double top taking place here, right? So this is clearly a strong resistance barrier at 106.51, which we have identified as the first resistance. And looking a little bit below in terms of support, right? We see previously Dollar index running into resistance at around 104.55 at the end of October, right? Forming a nice swing high resistance here. And then after the breakout took place on Wednesday, 6th of November, prices then pulled back the subsequent day on 7th November, Thursday, and bouncing off this pullback support level here. So as it bounced off this pullback support level, it creates a nice overlap. So this is an overlap support at 104.42, which has been identified as the first support and is also accompanied by a Fibonacci retracement at 23.6%. Once again, this retracement level was found starting from here, this swing low on the 27th of September, going up to the high of last Wednesday, 6th of November. Now, take note, should we see the current candle rise above this swing high here on 105.44, once that happens later today, right, this retracement level is no longer valid, right? Because remember, price has made a new high, and we would have to delete this Fibonacci retracement. As of now, it's still valid because it continues to trade underneath 105.44. But once dollar index rises above this high that was formed on Wednesday, 6th of November, this retracement level is no longer valid. So take note of that. All right, now let's move on over to the euro, right? Let's take a look at the euro. And we can see the euro falling sharply as well with dollar index rising. What we're actually seeing now is a potential bearish breakout in progress, right? We're actually seeing a potential bearish breakout in progress initially, right? This was a nice swing low support level that had taken place in the third week of June, right? A nice swing low support at 1.0677 being formed here. And this is where I thought the euro would stabilize once more, right? Because we see here on Wednesday, 6th of November and Friday, 8th of November, the euro bouncing off this level once more. But today it did retrace a little bit higher after gapping lower. It retraced higher to close the gap, but it looks like that selling pressures have increased, and what we're actually looking at is a potential bearish breakout currently in progress for the euro. Now, if that and with this bearish breakout currently taking place, materializing, right, identifying your take profit target at around the first support is a suitable area to do so, right? The first support is another swing low that has taken place here in mid-April, a nice swing low support at around 1.0613. So this is a suitable area to identify your take profit target for this potential bearish breakout that's currently in progress. Right, now as price makes a new low, right, I initially had run a Fibonacci retracement starting from this swing high on 6th of November, going to the low of last Wednesday. But of course, with price making a new low, this retracement level is no longer valid. So let's get rid of it. That's fine. And of course, there's a nice little pullback taking place here, pullback resistance taking place here on Thursday, 7th of November at around 1.0802. So this is where we've identified the first resistance. So take note, where with dollar index rising strongly, demand for the dollar is clearly very strong. That has caused the euro to drop like a rock. And what we're seeing now is a potential bearish breakout through the pivot, and we can target close to the first support, right? Maybe around 1.0625, right? Just slightly above the first support. Identify a take profit target for any short trades that you may have. Right, now let's take a look at dollar yen, right? Dollar yen sold off quite strongly on Thursday and Friday, right? The yen had strengthened over this in the last 2 days, final 2 days of last week, but we've seen demand for the dollar pick up once more, causing dollar yen to stabilize around 152.60 and rising as high as 153.94. Right, so you can see a very strong rise in dollar yen. So initially, and before markets had opened, right, and especially after after Thursday and Friday's downfall, I was expecting dollar yen to fall, even continue to fall lower. However, that did not materialize. We've actually seen demand for the dollar pick up strongly once more, causing dollar yen to rise. So first resistance now is actually going to be identified as the pivot. Pivot here is going to be identified as the first support, and we can probably expect a little pullback should we see dollar yen hit the pivot level here. The pivot level is at 154.70, and we need to look for a new resistance now. Right, we can keep 23.6% and get rid of this, and we can probably run a Fibonacci retracement from this swing high on the 3rd of July going down to this swing low here on the 16th of September. Let's take a look at 61 and 78.6%. Right, 61.8% has clearly been exceeded, so that's fine. We don't need that. We can just keep 78.6%. And when I look across this level here, close to where the 78.6% retracement sits, that's a pretty decent overlap level as well at 157.63. So this is an overlap resistance that's accompanied by Fibonacci retracement at 78.6%. Right, so with dollar yen rising strongly, right, with dollar yen rising strongly today, right, you can identify a potential take profit target close to the pivot, right? So if you've gone long on the dollar index as of this morning, right, identifying your take profit target at around the pivot is a suitable area to do so. And should we see dollar yen hit this level, it may consolidate around here, running out of steam perhaps, and making a small pullback, right? And at the same time, also probably see a pretty decent overlap of ascending trend. Oh, not really. That's not the best ascending trend line here. But if I were to do this is a much better trend line that looks to be pretty good as well. You can see a few touches for this ascending trend line here, right? Take note, so if dollar yen does break underneath or break below this ascending trend line, it's probably going to invite further selling to take place and push it down towards the first support. But for now, demand for the US dollar is strong, so we can definitely expect it to rise up towards the pivot at 154.70, which is a suitable area to identify as a potential take profit target. Right, so this is what we have for dollar yen. Let's take a look at the Aussie. Right, we can see the Aussie gapped lower today, right? Right, and then it rose quite strongly, rising as high as 65.97 to fill the gap before pulling back once more. Right, it's trading very close to a support level at 65.58. This is a pretty decent swing low support. Right, it's almost like a multi-swing low support here, double bottom being formed here since 29th of October. So pretty strong support level that has that continues to remain respected as of now, right? So the pivot level is a swing low support at 65.85, and is also accompanied by a Fibonacci extension at 127%. So this extension level was found by running a retracement from this swing low on the 11th of September, going up to this swing high on the 30th of September. We can see the Fibonacci extension at 127% sitting just below the pivot here. And looking further below, there's another major swing low taking place in the first week of August, a very nice swing low taking place here in first week of August. Of course, we can see this wick dropping as low as 63.49 on 5th of August, but generally we can see, right, that this is a pretty strong support level, which we have identified as the first support here. And in terms of resistance, right, we can see on Thursday and Friday, right, the Aussie rebounded very strongly, but it ran into resistance at around 66.78, which is where the 38.2% retracement sits as well. So there's a nice pullback resistance level here, and the 38.2% Fibonacci retracement was found by starting from this swing high. We started the retracement from this swing high on the 30th of September, going down to the swing low on the 6th of November. We can see the 38.2% retracement aligned very well with the pullback resistance here. Right. Right. Hi, Rero. Good to see you as well. All right, so let's take a look at the cable. Right, once again, cable similar market structure to the euro as well as the Aussie. Right, we're seeing very similar market structure, and we can see it's testing this pivot level here. The pivot at 1.2882 is like a nice support level here, almost like a sort of like a mini swing. First mini swing taking place here on 31st of October, second mini swing taking place here on 6th of November. Right, nice double bottom being formed here. So this is a strong support level that's also accompanied by a Fibonacci extension at 127%. Right, so this extension level was found by running a retracement from here, this low on 11th of September, going up to this high on the 26th of September. You can see that the 127% extension levels aligns very well with the pivot. To take note, the pivot is currently being tested here, and if dollar of course remains very strong, right, demand for the dollar remains elevated, I won't be surprised if we see a potential bearish breakout for the cable as well, similar to what is currently going on for the euro here. So take note, there's a potential bearish breakout in progress for the euro, and for the pound, right, for cable as well, we probably could see a bearish breakout take place later on today as well. Right, and slightly below, right, slightly below at 1.2684 is another nice swing low that has taken place here in August, right, in about mid-August, first week of August. Another nice swing low taking place here. This is where the first support has been identified. And for the resistance, right, there's a nice overlap resistance at 1.3044. And we can see previously the Aussie making a nice swing high resistance here on 17th July, making a nice swing low on 11th of September. Some consolidation here as well, support here in the second week of October, and after that resistance since 21st of October. So this creates a very nice overlap level, which we can identify as the first resistance. And not only that, we can also see that it is accompanied by Fibonacci retracement at 38.2%. This retracement level was found when running, starting from this swing high on 26th of September, going down to the swing low here on the 6th of November. Right, so take note, potential bearish breakout for cable, and we are currently seeing a potential bearish breakout materialize as well for the euro. Right, now let's move on over to the commodities. Let's take a look at spot gold. Right, XAU USD is the instrument that tracks spot gold futures, and we can see that after making an intraday high on Thursday, 31st of October, this intraday high was formed at $2,790.10 per ounce. Since then, gold has fallen quite sharply. Right, it has lost, I would say, from peak to trough, nearly 5.3%, right? It has lost nearly 5.3% from peak to trough, dropping about $140 per ounce, right? A big drop here in a period of like 10 trading days or so, right? So with gold prices pulling back, right, I've identified the pivot at 2,604. And this level here is also intersects very well. The pivot, which is a pullback support level, intersects very well with this ascending trend line. We can see a strong ascending trend line that's been in place since 13th of February, right, since mid-February, and very nice ascending trend line. And we see the ascending trend line intersect with the pivot as well as sitting within the green Ichimoku cloud. Remember the Ichimoku cloud? The green Ichimoku cloud itself can function as an area of support. So we have three elements highlighting a potential strong support zone, and should we see spot gold prices fall towards this level here, it could very well stabilize and reverse the bounce higher. So we have a potential bullish bounce opportunity here, and also at the same time, all right, before we get there, right, if you have been shorting gold since last Friday or perhaps from this morning, identifying a take profit target for any short positions just above the pivot is a suitable area to do so. Remember, the pivot is a pullback support level that intersects with the ascending trend line and also sits within the green Ichimoku cloud, highlighting a strong support zone here. So any take profit for any short trades should be identified just above the pivot as well. Slightly below, first support is at $2,531. This is a pullback support level that's also accompanied by a Fibonacci retracement at 23.6%. Right, this retracement level was found by starting from this swing low on 6th of October, going up to the swing high at the intraday all-time high on the 31st. Right, so take note, gold prices are pulling back for the second consecutive day. And if you're short on gold, identifying your take profit target just above the pivot is a suitable area to do so. And over the next few days, should we see spot prices stabilize around this zone that's highlighted by the green Ichimoku cloud, the ascending trend line and the pivot, we may have a potential long opportunity as well, right, to ride the bounce here or to ride the bullish reversal for spot gold prices. All right, hi Bob. Question about platinum. I've not read any news on platinum, but we can take a look at how this metal is trading as well, right? Let's take a look at that. Interesting to see on what is it. And if you have any news about platinum that you have come across, do drop it in the chat box, right? I'll be more than happy to take a look later on. But in the meantime, let's see what's happening with platinum. Right, so PL1 apostrophe exclamation mark, sorry, is the symbol for platinum futures, right? So let's take a look at that on a daily time frame. Right, we can see here. Let's just look at it on a weekly first, right? Just to get a grasp of how this metal has been trading, right? We can see here it's hit a high of about 1,347.30 cents back in mid-February of 2021, and since then, right, if you just look at it on a weekly time frame, it's sort of like approximately ranging sideways since April 2023, right? It's a very pretty wide range, of course, right? It's a pretty wide range since April, but generally you can see there's no real bullish uptrend or downtrend, right? We can see a very nice bullish uptrend taking place in March of 2020 all the way till February of 2021. After that, we see a nice bearish momentum taking place from February 2021 all the way till July 2022. But since then, right, it's pretty much been trading sideways, of course, within a relatively wide range, right, with a lower bound at around $840 and the upper bound at around $1,140. All right, hi Lewis. Yes, we'll be looking at US oil as well. For that, the instrument that we use will be the XTI USD. So we'll be covering crude oil as well once we're done with platinum. All right, so you can see here for platinum, it's been trading in a very wide range, where it's sideways trading, right? You don't really see any clear bullish or bearish or clear uptrend or downtrend, but rather just sideways action. And when you look at it on the daily time frame, right, it's been pretty volatile as well. We're easily able to identify significant swing highs, swing lows, swing highs as well, and swing lows over here, right? So once you can easily identify market structure like this, right, it also tells us that this metal is experiencing high volatility as well. So you should watch out for any sharp reversals, right, whether they're bearish reversals or bullish reversals, and try and ride that momentum, whether you're riding the momentum to the upside or to the downside, right? So with prices currently pulling back, right, with crude prices, with platinum prices pulling back after making this high on Wednesday, 30th of November, it's sort of stabilized at around $980. However, I see a pretty strong support level at around $955.60. This is where I would identify the pivot, right? This is a nice multi-swing low support, right? We can see the first swing low. See the first swing low taking place here on 23rd of September, and the second swing low taking place here on 9th of October. This is a multi-swing low support level, and this is where platinum could stabilize once again should it drop all the way down to this level here. So perhaps a potential bullish bounce for platinum of the pivot that we see. And slightly lower, right, we can see here on 3rd of September, right, at around 907, another nice swing low taking place. So quite clearly, this is where the first support for platinum sits, and it's almost like a multi-swing low support once more, right? The first swing low taking place here at the end of April. You can even argue here the second swing took place at in beginning of August, and the third swing taking place at the beginning of September. So very clearly a strong multi-swing low support at 908. And in terms of resistance, okay, before that, perhaps there's a Fibonacci extension we can use, right? To find that extension level, we're going to run a retracement from here, 9th of October, going up to this high here on 30th of October. Key extension levels sit at 127 and 161%. Right, hi Jamilu, good to see you again, right? Right, so coming back here, we can see the extension levels actually don't really align well with any of the support that we have identified, so that's fine, right? Do not force a Fibonacci level onto the analysis if it doesn't align with a predefined support level or predefined resistance level, right? The Fibonacci levels, right, retracements, extensions, or projections are to be used as a complementary tool, right? But not as the first cut, right? The first cut should always be identifying key support and resistances, and should we see a Fibonacci level aligned very close to that level, then of course we'll be using that particular level in our analysis. But for now, you can see very clearly 127 and 161 extension levels are clearly no man's land, so we don't need them for now, right? In terms of resistance, right, we can see here since 4th of November, price has failed to break above this resistance barrier here at 1008. So this is where very clearly the first resistance can be identified, and we can also probably run a Fibonacci retracement from this swing high here, 30th of October, going down to the low on 6th of November, might be the 38%. Yep, there we go. There's a 38% retracement and aligns very well with this pullback here. So in this case, we can see, right, once we've identified the resistance level, then we run the Fibonacci retracement. We can see that this 38% aligns very well with the first resistance, and hence we're going to keep that in our analysis. All right, so these are the key levels here for platinum, right, on a daily time frame. Now you can probably, it's been in a strong downtrend since 30th of October, so nearly a period of 2 weeks. It's been falling lower, and where it's quite likely to stabilize once again is at the pivot level here at 955. So this pivot level can also be used as a potential take profit target should you be shorting platinum. All right, now let's move on over to XTI USD. All right, hi Costas, great to see you again. All right, thanks for tuning in once more. All right, looking at XTI USD, so this is the instrument that tracks WTI crude oil futures, right? Similar to what the US oil is also tracking, right, Lewis? Whatever US oil spot, right, is similar to XTI USD as well. So we can see here, just like platinum, XTI USD has experienced wild fluctuations, right? You can see significant swing highs taking place. And we can see significant swing highs taking place since April of 24, and we see swing lows as well, very significant swing lows taking place at various points since then, right? So you can see very clearly sharp reversals taking place throughout, highlighting the high volatility as well as the strong moves in each particular direction, right? Each move has seen has been pretty large, right? And when we look at it, like this swing high that's from first week of April down to this swing low here on 5th of June, right? Crude prices dropped more than 17%, and then after that it stabilized and it made a very strong rebound to gain almost 17%, and then once again dropping 17%, of course, once more, right? From 4th July till 7th August, and you can see, right, the swings are very clearly defined, and the momentum in each direction is very strong, and the range is very large as well. So take note of that, because it's really important to know that when a particular instrument, or in this case this commodity XTI USD, is experiencing high volatility. Now, after running through resistance last week at around $72.63, right, this is an overlap resistance barrier that was previously a strong support level, right? We see the first swing low taking place here on 5th of June, second swing low taking place on 6th of August, third swing low taking place on the 23rd of August. So this was a very strong multi-swing low support level that had been in place until 3rd of September, where it finally gave way. After that, it proceeded to function as resistance at the end of September, functioned as support once more in mid-October, and then resistance again on the 3rd week of October and beginning of November. So this is very clearly a very significant overlap level, which we have identified as the first resistance, and that's at $72.63 per barrel, right? And it's an area where crude oil has once again run into resistance last week, and with crude oil falling sharply today as well, right, it's falling towards another multi-swing low support. First swing low took place here on 27th September. Second swing low took place on the 30th. Right, so with prices falling sharply towards the pivot, this is a good area to identify a potential take profit target. Right, so if you've been short crude oil as of last Friday, or perhaps from this morning, or as markets this open earlier today, right, identifying your take profit target for any short trades at around the pivot is a suitable area to do so. And slightly below the pivot, there's another multi-swing low support that's been in place since March 2023. Since March 2023, the first swing low took place. Second swing took place on 4th of May 2023. And the third swing low took place on 10th of September 2024. So very clearly a strong support level here. Right, so there's the key levels here for XTI USD. Crude prices remain under pressure today as well. And I see a strong multi-swing low support at $67.74, which has been identified as a pivot. This is where crude prices could once again stabilize and reverse to stage a minor rebound. So take note. So if you've been shorting crude oil, right, identifying a take profit target at around the pivot is a suitable area to do so. Right, so we've covered gold and crude oil as well. Let's move on over to the indices. Let's look at the 40. Right, the 40 is the instrument that tracks the DAX futures, and we can see that since making this intraday high on 17th of October, right, the intraday all-time high for DEX has been formed on 17th of October, and that's at 19,681.50. We can see it's sort of just consolidating between the pivot and the first support, right? You can see pretty much it's been consolidating between these two levels. First support is at 19,089.50. It's a nice pullback support level. That's accompanied by Fibonacci retracement at 23.6%, right? And the pivot here, of course, is a swing high resistance close to the intraday all-time high, right? So we can see DAX has rebounded strongly last Friday, and despite gapping significantly lower this morning, it has risen quite strongly. And once again, right, it's approaching the intraday all-time high. So this is a suitable area to identify your take profit target for any long positions that you may have for the E40 or the DAX. And beyond the intraday all-time high, the next resistance barrier is potentially at this Fibonacci extension level at 161%. This sits at 20,101. This extension level was found by running a retracement from the intraday high on 17th of October, going down to the low, which is the absolute low here, right, to the low here on 7th of November. So that's how we found this 161% extension level. Looking over at US 500, right, hi Costas, yeah, we can quickly cover Euro, Gold again, right? We've covered it at the beginning of the session, but yeah, no worries, we can quickly go through it again once I'm done with US 500, and we can touch on dollar franc as well. Right, so looking at US 500, right, it looks to be breaking above a strong Fibonacci confluence level, right? This pivot at 6,098 was identified as a potential resistance barrier, defined by a Fibonacci confluence, which is the 161% Fibonacci extension and the 61.8% Fibonacci projection. Now, this extension level was found by running a retracement from this high on 17th of October, going down to this low here on the 4th of November. We can see the 161% extension sits at 5,997, and then we ran a Fibonacci projection starting from here, 0.1, 6th of September, going up to 0.2, 17th of October, and ending at 0.3, 4th of November. We can see the 61.8% projection level aligns very well with the extension at 161%, and we also can see the 78.6% projection level sitting at 6,085. But for now, it looks like we're not seeing, we're actually seeing a potential bullish breakout take place, right? I was expecting US 500 to stall around this pivot level here, right? It's a strong Fibonacci confluence. I'm expecting it to stall around this level and make a small pullback, but it looks like demand for US equities, particularly the US 500, is extremely strong, and what we are seeing is a potential bullish breakout currently in progress. Right, first support is at 5,872. It's a pullback support level, right? This was a strong swing high resistance that was formed in mid-October, and now it's likely to be a potential pullback support level. Right, so this is US 500. Let's go back to Euro, right? What we are seeing now, right? We saw earlier potential bearish breakout currently in progress, right, for the Euro, but it looks like looks to be stabilizing above the pivot once more. The pivot is actually a strong swing low support that has taken place, that was formed initially on at the end of June. Very strong swing low support, and then we saw the Euro stabilize above this level on Wednesday, 6th of November, and Friday as well. And just about an hour ago, we were actually looking at a potential bearish breakout, and perhaps this bearish breakout could materialize over the next few hours. Right, take note the Euro has depreciated significantly versus the dollar, right, from 25th of September till 24th of October. So in a period of 4 weeks, it has lost over 4%, right, dropping more than 460 pips. And since the beginning of November, second week of November till now, it has dropped another 2.5%, right, losing almost 270 pips as well. So very strong moves to the downside for the Euro, right? The Euro has clearly depreciated significantly versus the US dollar, and it looks like it could get even weaker as well, especially if this pivot level gives way. So we're looking at a potential bearish breakout currently in progress, but it looks like prices have stabilized once again. So do watch out for this level here. This pivot level here is going to be key for the Euro. Right, let's go back to gold. Right, XAU USD, right, it's been trading in a strong bullish uptrend. Right, it's been trading in a strong bullish uptrend since mid-February, right, and it's also respecting this ascending trend line. We can see price has bounced off this ascending trend line several times. 27th of June, 25th of July, 7th August as well, right? Strong rebounds of this level, and the ascending trend line intersects very well with the pivot. The pivot is a pullback support level, and the intersection also sits within the green Ichimoku cloud. Remember, the green Ichimoku cloud can function as an area of support as well. So these three elements are highlighting a potential strong support zone. So should we see gold prices reach here, it's quite likely it could stabilize around this zone and reverse the bounce higher. So before we get there, right, so if you've been short on gold prices, right, maybe perhaps since last Friday or from this morning, identifying your take profit target just above this intersection is a suitable area to do so for any short gold trades. And subsequently, should we see it stabilize around this level, it helps us identify a potential long opportunity as well to ride the bullish bounce, right? So these are the key levels here for spot gold. Resistance, first resistance clearly is at the swing high that has taken place on 31st of October. That's where the intraday all-time high has been formed. And slightly below is a pullback support level at $2,531, and it's accompanied by a Fibonacci retracement at 23.6% as well. All right, now we can move on over to dollar franc. Right, dollar franc actually has continued to rebound higher as well. Right, so when I look across where the 50%, let me put up all the fibs. Right, we can keep 50 and 61. This level here at 88.08 is actually the pivot, right? This is where we can expect prices to probably stall. And make a small pullback. And the pivot here is a nice overlap level. This is actually an overlap support level. I'll explain that in a little bit. And of course, the first resistance is this pullback here that has taken place on Tuesday, 23rd of July, which is also where the 61.8% retracement sits. Right, so we can see here, let's zoom in a little bit. Right, we can see previously dollar franc was ran into resistance at around 87. Right, at the end of October, early November, it ran into resistance at around 0.87, and after that the bullish breakout occurred on Wednesday, 6th of November, and then it proceeded to function as a nice support on 8th of November. So this then functioned as a nice overlap level, which we have identified as the first support. Pivot is actually a pullback resistance, right? It's a pullback resistance level that's accompanied by two Fibonacci levels. We have a Fibonacci projection at 61.8%, and we have a Fibonacci retracement at 50%. Right? This is a pretty strong. This could potentially be a pretty strong resistance barrier due to the presence of a Fibonacci confluence, which is the 50% retracement and the 61.8% projection. Right, so we can probably expect dollar franc to stall around this level. And if you've gone long on the dollar franc since today's open, or perhaps even from last Friday, identifying your take profit target at around the pivot is a suitable area to do so. Beyond the pivot, there's another pullback resistance taking place at 89.13. This took place on 23rd of July and is also a level that's accompanied by another Fibonacci confluence. This time is the 61.8% retracement and the 100% projection. So another strong barrier being highlighted here as well. Right, so these are the key levels for dollar franc. Now, before we move on, I'm just going to launch a poll. Truly appreciate it if you guys can give your feedback in regards to today's session, and then we'll continue with Bitcoin after this. We'll take a look at Bitcoin and Ethereum. All right, okay. So we've covered a few of the major currency pairs. We looked at the dollar index. We looked at commodities such as gold and crude oil. We've also touched on the indices, the DAX and US 500. Let's move on over to crypto, right? And we can see crypto as it's a bit strange. On the daily time frame, I see a large gap, but on the 4 hour, okay, so I think this might be something to do with the price feed, right? When you look at it on a daily time frame, there's a huge gap here. However, when we look at it on the 4-hour time frame, there's no such gap. I think it just might be some uh, feed issue with regards to the display here on the daily time frame. So take note, there shouldn't be any gap being identified here. So if we look at it on the 4-hour time frame, very clearly there's no gap, and 1-hour time frame as well. Let's take a look at the weekly. Strange, it looks like on the higher time frames, daily, weekly, and monthly, there's no gap, but daily and weekly there seems to be registering a gap. I think, remember, this is not a valid gap, so to speak, because when you see it on the lower time frames, 4-hour, 1-hour time frames, clearly there's a nice continuation in the building of the candles here. Now, so with that, let's do the analysis on the on Bitcoin. Right, we can see, right, following the outcome of the US presidential elections, we've seen demand for crypto pick up strongly, especially for Bitcoin and Ethereum, and also the wider crypto market as well. All right, just going to end the poll. All right, thanks everyone for those who have voted. Truly appreciate it. All right, okay, so let's continue. Right, so previously, this was the previous intraday all-time high for Bitcoin at $73,843. This was formed in March of 2024. Right, this was a level that had yet to be exceeded until last Wednesday. Right, so after breaking out of this level, this is a significant swing high resistance. So this swing high resistance is now going to function as a potential pullback support level, which has been identified as the first support, and this is at 73,176. Now with price making new all-time highs, right, with Bitcoin hitting 82,000, we have used Fibonacci projections to help us identify the next potential resistance barriers. So these projection levels were found starting from here, 0.1 on 6th of September, going up to 0.2 on the 29th of October, and ending at 0.3, 4th of November. Right, so we can see 78.6% projection sits at around 83,290, and 100% projection sits at around 87,814. So these are potential resistance barriers that have been identified by Fibonacci projection. And of course, if you've been long Bitcoin over the weekend, right, especially since last Wednesday, right, identifying your first take profit target at the 78.6% projection level is a suitable area to do so here. Right, then let's take a look at Ethereum. Right, there seems to be a gap on Ethereum as well on a daily time frame, weekly as well. Not so much on a monthly. What about 4-hour time frame? Nope, there's no gap on the 4-hour, 1-hour as well. So it looks to be a similar issue for Ethereum as well on the daily and weekly time frame. So take note, there's no actual gap, so to speak. Right, it's just probably some display issues on the daily time frame here. Now, Ethereum had been restricted under about 2,850 since 13th of August, right? It's sort of been it had been ranging approximately between 2,200 on the lower bound and about 2,770 on the upper bound as well. But of course, after last week, it's made a nice bullish break above this resistance barrier here at 2,863, which is now going to be identified as the first support, right? This is now a potential pullback support level, and the first resistance is identified by the pivot, which is at 3,386. This is an overlap resistance barrier that's accompanied by 61.8% retracement. All right, although the 61.8% retracement sits pretty far from the pivot, but we can see it does look to be functioning as a potential resistance barrier here. We can see Ethereum sort of running out of steam at around 3,200 today as well. And beyond the pivot, right, there's a major swing high resistance that has taken place on 28th of November, and that's at $3,889. All right, so this is what I've got. We've covered pretty much everything, right? Is there any other requests, right? We still got a little bit of time, so should you have requests for any other instruments, please do let me know, right? Whether it's a currency pair, any of the other indices or commodities, do let me know, and I'll be more than happy to go through the analysis with you. Right, if not, then I just take note of what's up on the economic calendar for this week, right? There's quite a few things going on, right? Today is relatively quiet, right? Not much going on except for inflation expectation data out of New Zealand. But tomorrow, we've got the labor market report out of the UK, where we'll get insight into the level of claimant count change, average earnings index, as well as the unemployment rate. We also have FOMC Governor Waller speaking tomorrow, along with Philadelphia President Harker as well. They're both speaking at their respective events. And then on Wednesday, we have US inflation data. CPI data is out at 1:30 p.m. GMT. And then we have PPI data out on Thursday, 14 November at 1:30 p.m. GMT. And on that day, we've also got various central bank chiefs speaking as well. Once again, they're speaking at their own respective events. Chairman Jerome Powell uh, takes center stage at 8 p.m. GMT. But before that, we have ECB President Christine Lagarde at 7 p.m. And of course, we have Bank of England Governor Andrew Bailey at 9 p.m. GMT. And finally, on Friday, we have GDP data out of the UK, retail sales out of the US, and of course, industrial production figures and retail sales out of China as well. Right, so looking at inflation, right, we can see that the forecast for monthly CPI for the core is expected to rise by 0.3%, while headline CPI is expected to gain by 0.2% on a monthly basis. Annualized CPI reading, right, headline CPI is expected to remain unchanged at 2.4%, but all eyes will be on the core as well. Core CPI has accelerated slightly in September, rising from 3.2% to 3.3%, right? And it's also something that the Fed is keeping a very close eye on, especially for the category which is services less energy services. So if we do see inflation data come in line or match their respective forecast, we can probably expect the dollar to lose a little bit of steam. Conversely, if we see the core accelerate once more, right, then I won't be surprised if we see demand for the US dollar pick up even further. Looking at retail sales, that's out on Friday, 1:30 p.m. GMT. We are seeing pretty decent monthly gains over the last 3 months. And for the month of October, we are expected to see sales figures increase by 0.3% month over month. Right, so should we see stronger sales, this is of course going to provide some tailwind for the US dollar. And of course, as we approach Thanksgiving, right, we've got a huge range of shopping promotions coming up, right? We would have Black Friday sales, Cyber Monday sales, and of course the Christmas shopping season would commence very shortly as well. So we can probably expect retail sales to be relatively strong as we wrap up 2024. Right, and looking at China's industrial production figures, it has accelerated quite strongly. In September, this was the fastest expansion since May, accelerating from 4.6%. Sorry, not 4. Yeah, I think this was about 4.6, 4.5% to about 5.4% here, right? And we're expecting this acceleration to continue in October with industrial production rising 5.5% year over year. So, right, we could see crude prices being supported should we see strong industrial production figures as well as higher retail sales out of China. So take note, we could potentially see a near-term tailwind for crude oil prices on Friday should we see strong retail sales and higher industrial production output. Right, that's all I've got for you guys today. Right, thanks everyone for tuning in to this live trading session brought to you by IC Markets. Do look out for all upcoming webinars for the rest of this week. Right, we've got a combination of educational topics and live analysis in English, Thai, and Bahasa as well. All right, thanks everyone. Take care and have a great trading week.